Welcome to Markets Now. I'm Michelle Rook with Mark Schultz, NorthStar Commodity. We're seeing livestock all to the plus side this morning. We're drifting just slightly in the grain trade after kind of a mixed start this morning. But Mark, let's talk about corn especially. We had a nice push out of the report with the lower ending stock surprise, but it looks like we ran up into chart resistance here. So is that a reversal at this point?
Well, it's not a reversal yet at this point,
Okay.
but basically what it looks like is you've had the nice little equal leg up. You ran into the highs that were posted back in that September October time period at 451.5 on March corn. That's a key number to get above. If you can get above it, then it looks much better on the technical side. Right now, it just looks like that's a pretty strong stopping point at the present time. And again, I think for the most part, corn, soybeans, and wheat, you've had great export business over the last 2.5 to 3 months. You're gonna run into trouble here as we move forward, because eventually you're going to have the South American crop come into the world market. So that's going to be the issue here. So you need something to go wrong on the weather, and right now that's not occurring.
Yeah, let's talk about that, because that's really the biggest news that the markets are going to have, at least corn and soybeans, to trade going forward. And we really haven't had any weather interruptions down in South America. There's a little bit of dryness in the Argentina forecast, but that's a little farther out there, isn't it?
Yeah, it is. The right now the weather's very good, and they're in the planting progress or planting period here. So that'll go up until about the 10th, maybe the 15th of January, when that window typically closes for them. And they're in that 60, 70% planted right now, corn and beans. So it's not a problem. So it doesn't take a lot of moisture at this time period. Now, once you cross over and start getting into the last week of December into January, if indeed, and there are hints on some models suggesting we could go into a hot, dry pattern for Argentina, then yeah, then you might be able to start creating it. But again, we're still talking something that's 15 and 20 days out.
So we need a weather problem in South America to get over these resistance areas on the charts, is what I hear you saying. And demand alone is not going to be enough, even when we see, flash sales like we saw this morning of beans.
Well, yeah, it was good to see that we had another 12.2 million bushels of beans sold to unknown destination. So that's a nice little surprise. The bean demand has been very good. So has been the corn demand. And it's one of the reasons why USDA kept the corn exports up higher than, or raised it higher than expected in the December report, which gave you a kind of a friendly tone. But for right now, when you look ahead, especially in beans, and I would say corn eventually down the road as well, but in beans, we're already hearing quotes now moving up into the category of 65 to 85 cents cheaper to buy beans in Brazil than they are in the U.S. when we get to the February, March time period when the harvest in Brazil begins.
And what about the wheat market? Because we've traded a little two-sided here this morning, and we got a little bit of friendly news with the lower 20 million bushel lower ending stocks in the report on Tuesday. But overall, Russia is still the big player here. And what do you know about how small their crop is, and is the market reacting to that?
Well, as far as the Russian crop and the size, I don't know if anybody really knows what it is, and who's throwing out numbers there is anybody's guess. So I think they had some tough times in the growing season. But regardless, they're still selling wheat. And there's always the chatter that they're going to slow the export business down in the months ahead. And it always seems like when you get another month out, there's push it back another month. And we keep going. So the bottom line is they're still purchasing wheat is still cheaper to buy it in Russia, still cheaper to buy wheat in Europe. It's still going to have Australia and Argentina. Wheat is started the harvest. And you're going to start seeing that wheat move into the world market as well. So the U.S. will be one of the last places in which to go get the wheat here for the short term.
And how much has our strong dollar been a headwind for us in that respect?
Going to be significant right now. You've got a currency trading almost U.S. dollar index almost 107%, Brazilian real at all-time record lows, Argentine peso at record lows. You got Russian ruble at record lows. They're all in the catbird seat as far as seeing better demand coming after, and that's where people are going to buy their product for the time being.
No doubt. Okay, cattle market. New highs for the move yesterday in the live cattle futures. We're seeing follow through buying today, but part of the push has been this higher cash trade, hasn't it?
It's been all about the cash market, and that's has been surprisingly much stronger than I would have expected at this time of the year. Typically, you get a little bit of a pullback in here, and then you start getting a little stronger right after the first of the year. But this market has been on a tear, even though packer margins look like they're going to be in the red, some $30 to $60 per head. They are still out buying. And again, yesterday we saw the cash bids jump from 190 to 191 on up to 193, pretty consistent, and even saw bids at 193. So I wouldn't be surprised. We've even heard some of these sales going off on individuals picking up as much as 195 on up to 198. Not uncommon when they go onto the grid. So pretty strong market in the cash, and the futures started this week well below the cash market, and it has been on a tear now, up over just over $5.50 in just the last 3 trading days.
So did the live cattle futures go back and retest the all-time or the contract highs then, you think?
Well, if you look at just the February cattle chart, we cleared $190.50 on the chart. When you look at that, you had that big pullback here back in the summer. You came back up. You then had a correction. That correction basically lasted about 2.5 to 3 months, and we just sat in about a sideways trading range. When you break out here, if you want to look at starting another equal leg up, it would project something up towards $202.
And the feeder market, obviously the cash market's been on fire. We're getting a little bit of, I guess I would call it rumor that maybe the Mexican border is going to stay closed a little bit longer than expected. Is that what you're hearing, or is that what's pushing the feeders as well?
Well, the feeder cattle market's been on fire. Of course, it's been closed here for the time being. Back in, I believe it's November, when they shut it down and talked that it would be 30 days. And so somewhere around Christmas, we would reopen the border back up. I've heard a little bit of chatter. You just don't know whether they're accurate or not off the news wires of maybe another couple cases of the screwworm being reported in Mexico and in Latin America countries. So a little bit of uncertainty there. You couple that, then you've got the possibility of the tariffs going on when President-elect Trump comes into office on January 20th. If he throws a 25% tariff on all goods coming in from Mexico, that would include feeder cattle. And if that's the case, then you put 25% on top of the price of feeder cattle right now. You have to pay an extra tax. You'll be well over $300 for feeder cattle.
Yeah, it's already crazy. It's just going to get more crazy, isn't it?
I do think it's going to be quite the swings taking place, and it is not going to be an easy markets in which to navigate. I think part of me sits back and says, I think you start looking at it and say, I just got to play profitability, and if I've got profits, I gotta live with it, and if they're good profits, stay with it, stay orderly on the business plan, and I think you'll do just fine.
These prices, though, are causing some producers to pull cattle ahead, though, which is actually friendly, isn't it?
It is. Last week we did see the cattle weights drop 8 to 10 pounds. And now that's 1 week, so we shall see if that trend does continue. And I was surprised that we would do something like that in pigs, get the weights below a year ago when feed costs were cheap. But that has indeed happened. And if we start doing that with cattle, yes, it does become more on the friendly note.
And the hog market has consolidated under the contract highs here, but the funds are still near to record long. And so do they keep pushing that side of the market here? Because technically the charts don't look the best, do they?
The charts don't look bad. You're in started week. The rally has been 17 to 21 weeks in length, depending on which contract month you want to go after. So it's a pretty impressive move to the upside, basically without any correction to be had. So you might be experiencing really the true first correction in the market. Now, you're coming at a time of the year that historically you get a little bit weaker cash and cutouts right on up into the Christmas time period. In fact, the first of the year, you're going to have the short and kill weeks, things like this. So we'll see. I would say that if cattle prices continue to surge sharply higher, eventually I would think your demand will go over into the pork a little bit better. So excessively down movement in pork, unlikely unless some disease issue hits it. But otherwise, I think we should see some better opportunity. One thing I would be a little bit nervous about in pork, we rely heavily on pork exports. They're huge. 25% of all the pork what we produce gets exported. You certainly don't want to see something where tariffs go on and we start slowing down export demand, especially Mexico, which has been a massive buyer of U.S. pork in the last year.
Which is interesting because I thought that the hog market has actually handled the fear of tariffs pretty darn well, or pretty orderly. So if we do get those 25% tariffs put on, will it have that big of an impact, or will it just be a knee-jerk reaction and then we come back up, just because demand has still been so good?
Yeah, demand has been good, but again, demand has been very good going into Mexico. So I would still be a little bit concerned that it could get a little bit weaker on that front. Again, I think this is a market that's battling health issues and PRRS problems in the sow units. Up to, we think, 3% of the sow herd's been impacted with PRRS, maybe even a little bit more. That seems to have calmed down for right now. So maybe it's a little bit helpful on that front, but I think we're just going to have obstacles. The bottom line is, in pork, I mean, it's always been, if you have a health issue, it's tough to make money. If you don't have health problems, you can do just fine. And right now, there's the profits to lock in buying feed, locking in the pigs, as the profit margins are quite good.
Yeah, I have heard the disease issues that you mentioned from producers, so that really speaks to your point there. All right, thanks so much, Mark Schultz with NorthStar Commodity. That is Markets Now.